Amazon on the call. And without wasting much time, let's do an introduction. Ladies and gentlemen, this is inspiring. Mrs. Folusho Ogundele is the managing director of Zenith Nominees Limited, a subsidiary of Zenith Bank PLC. She is responsible for servicing a portfolio of large corporates and financial institution clients, including the largest, most complex, and global relationships in various markets. Prior to her secondment to Zenith Nominees Limited as the chief executive in 2019, she had spent over 17 years in the banking industry with experience spanning trade services, operations, correspondent banking, and treasury operations. She's had key positions in Zenith Bank PLC, including head of Invincible and bills for collection, head settlement of FX and derivatives, as well as head fixed income and money market instruments. She played a key role in setting up the FX and derivative settlement unit in Zenith Bank PLC and took the same unit to enviable heights. She was part of the project management team that successfully implemented the bank assurance partnership arrangement between Prudential Zenith Life Insurance and Zenith Bank PLC. Mrs. Folusho Ogundele holds a bachelor's degree in accounting from the University of Ilorin. She's a fellow of the Institute of Chartered Accountants of Nigeria. She's a Securities and Exchange Commission registered member. Ladies and gentlemen, please help welcome Mrs. Folusho Ogundele. Good morning, ma'am.
Morning. How are you today? Thank you very much for that beautiful introduction.
Thank you very much, ma'am. We really appreciate your coming on this call and this session. And this being an inaugural session, this is very special to us. So let's dive right in. The first question, and this is just a real chat, could you, start by explaining the role of a custodian in the investment process and why this role is fundamental to investor protection?
Okay, I want to say a very beautiful morning to our audience. Beautiful morning to my host. Thank you very much for inviting me. It's a bright, rainy morning. Well, depending on what part of Lagos you're joining from. Okay, so let's just delve into the question. Before I address this question, I would just like to tell us a bit of who a custodian is, who an investor is, then just to put it in the proper perspective so that the question can be well addressed. So a custodian is a financial institution who is responsible for safeguarding a client's financial assets. So in the investment process, custodians ensure the safe keeping, settlement, and accurate record keeping of securities. Now, who is an investor? An investor is either an individual or an organization that puts money into a business or a project or an asset. And this is with the goal of earning a profit, a return, or some kind of benefit from that. As an investor, protecting your financial assets is just as important as growing them. Because what would be the point of losing your assets? Your aim was even to get profit or an interest from it in the first instance. So entrusting these assets to a licensed custodian provides several critical advantages that safeguard your investments and enhances operational efficiencies. As an investor, again, your top priorities include security, transparency, and confidence in how your assets are managed. So that is exactly where a custodian plays a vital role. So what are these roles in investment section? The first one I want to talk about is the segregation of assets. So a custodian keeps your assets separate from the custodian owns funds. What this means is that your investments are not at risk. Even if the custodian experiences some financial distress, your assets are safeguarded. You retain full and legal ownership and control of these assets. The second one I want to talk about is the prevention of misappropriation. Now, custodians enforce strict internal controls. What are these controls? Examples are dual authorization, maker checker protocols, and real-time monitoring. This makes it extremely difficult for any unauthorized party access or misuse these assets. The third one I would like to talk about is the part of regulatory oversight. Custodian firms are regulated by financial authorities. We have the likes of the SEC, the Securities and Exchange Commission. We have the Central Bank of Nigeria, the CBN, and other relevant regulators. We know that by this, it means that these custodians must meet high standards for compliance, capital adequacy, and also transparency. These rules are designed to protect investors from fraud, conflict of interest, and other operational risks. Then the next one I want to talk about is accurate record keeping and reconciliation. As custodians maintain accurate and real-time records of your holdings and transactions. These assets are regularly reconciled. They are reconciled with the central securities depositories. By depositories, we mean where these assets are kept. We have the likes of the CSCS and the FMDQ, and also the S4 maintained by the CPN. So these assets are regularly reconciled, and also with these depositories and also with the fund managers. This is just to ensure that nothing is missing, nothing is mismatched, and to ensure that nothing is accounted for. Okay, then I want to talk about is oversight of fund managers and the brokers. As custodians provide an independent layer of oversight over fund managers or brokers. What does this mean? This means that no single party has full control over the assets of the investor. What does this do? It adds a layer of checks and balances that protects the interest of the investors. Also, another thing I want to talk about is fraud mitigation. By holding assets with a custodian, investors are protected from internal fraud, broker defaults, or other operational errors. If an asset manager becomes insolvent, the investments of the investors remain safe and intact with the custodian. And then the last rule I would like to talk about is transparency and reporting. Custodians provide independent reporting. This allows the investors to verify the performance, the holdings, and cash positions directly. And this helps to make informed decisions, and it also enhances full transparency. So let me just summarize all this. You know, a custodian is not just to hold your assets, you know. Custodians are first line of defense against fraud, operational failure, and financial loss. Custodians bring accountability, they bring independence and structure to the financial system. This helps the investors to invest with peace of mind. You know, why you're trying to grow your investment, you also want to sleep at night. So custodian would help you with. Thank you.
Thank you very much, man. That was very, very detailed. I mean, we could just end the session right now, but we still have some questions. So the first one, and I get this question a lot, and in the case of insolvency or misconduct by the fund manager, so for instance, a fund manager, let's say an Ewedumbe Fund Managers Limited, went insolvent, due to internal mismanagement, their internal mismanagement. Of course, the funds are already, or the assets are already with the custodian. So how does the custodian manage that, for the investing public? So how do they get their money back? That's just
Okay.
um, yeah,
Okay, so what you're trying to ask is the recovery in case of insolvency of a fund
yes,
manager.
yes,
Okay,
yes.
if a fund manager becomes insolvent, the custodian continues to hold the assets securely. And since the assets are already segregated from even the custodians, even the fund managers' propriety, because fund managers also have proprietary assets, So the custodian continues to hold the assets securely. And then they are now court appointed administrators or trustees, which can work with the custodian to return the assets to the investors or transfer them to a new fund manager, as the case may be. So the investor does not lose ownership of the investments. They remain intact with the custodian. So in summary, the custodian arrangement, it serves as the first and strongest line of defense, against any fund manager risk.
Hmm.
This arrangement ensures that even if the worst case scenario, your assets are protected in that worst case scenario and they are accessible and they remain under your own legal ownership. So even if a fund manager goes insolvent, the assets are quite well intact. Yes.
Okay. Thank you very much. At least now everybody can go and rest. I think the important thing is, is to work with a fund manager that is regulated by SEC and has and it's good to ask if you're utilizing a custodian. In some cases, they are called nominees. Now, personally, I've worked in three subsectors in the financial services, and I've had to deal with custodians, all through. When I was in banking, I was sit there. I was hearing about custodians. When I was in the PFA, I was Pencom. We still dealt with custodians, and funny enough, yours was like almost like a dominant one. Then in now in SEC, I work with cowrie and you are and you are one of the dominant custodians in the case. So how do you guys manage regulations, and all those kind of things, to ensure safety of investors' funds? So are there different regulations from different regulators and things like that?
Okay, as a custodian, our key regulator is the Securities and Exchange Commission.
Okay.
And we have several guidelines governing custodians in Nigeria, from the SEC. I don't know if you just permit me to enumerate some of these regulations by the SEC.
No problem.
So okay, so I will just run through some of these guidelines. So the first one is the registration and licensing requirements. So all custodians are required by the SEC to be registered, and they must also meet a minimum capital requirement as prescribed by the SEC as well. Then some of the things that I've spoken about will come up again because these are actually set guidelines that we are guided by. So I've already spoken about some of it, but just to run through them. Segregation of assets too is also a guideline by SEC. The custodians must keep investors' assets separate from their own proprietary accounts and also from their clients' accounts. So this ensures that these assets are protected from misappropriation or claims in case the custodian becomes insolvent. Then independent oversight. Custodians are prohibited from acting as fund managers for the same assets they hold custody. So the roles of the custodian and the fund management is quite separate. So this ensures a clear separation of duties and it prevents conflict of interest. And it also safeguards the investors' investment, so to speak. Then safekeeping and recording were also required by the SEC to maintain accurate and up-to-date records of all the assets that custodians hold in custody, including the ownership and the transaction history. The SEC also requires a real-time or periodic reconciliation with the depositories, like I mentioned before, the depositories like the CSES, the FMDQ, and the likes, and also the fund managers as well. Fund managers also act on behalf of the investors. Then reporting and disclosure, were also required by the SEC to render some reports to the regulator. Some of them, the frequency is monthly, some quarterly, and some annually. Then the statements of holdings and transactions to clients, usually monthly, or as agreed with the clients. And also, we're also to notify in case of any breach or unusual activity. Is also a requirement by the SEC. So the SEC also requires custodians to act in the best interest of the investors at all times, because investor protection, it's what is paramount and topmost on the regulators mind. So they require us to act in the best interest of the clients, and we're also required to exercise due diligence and ensure timely settlements, collection of income. By income, I mean maybe dividends or interest and coupons, whatever benefits arises from holding a particular kind of instrument, and also processing of corporate actions. So I think I'll stop there for now. Yeah.
Thank you very much, ma'am. Sometimes some questions I will ask was, maybe seem like we are, putting everything on rewind again. But, there are some people,
Yes, actually, some
there are some
things will
people on the
actually
call
come.
that, yes, some people on the call may not be, they are not, a lot of people on the call are not actually finance, people. So, some things we must have said, permit me to ask you in another way. So, how do custodians help prevent misappropriation and unauthorized movement of investor funds? So, a fund manager, case in point, a way to be a fund managers, you could just wake up tomorrow morning, the CEO can say, I want to marry another wife, and say, oh, let me take Mr. Lagbaja's funds and go and get another wife. How do you guys prevent that?
Okay, there's what I've spoken about, this dual authorization.
Yes.
There's no single party that can start and end a transaction. So custodians, there are several measures that you put in place to safeguard against maybe the example you gave. So the dual authorization and segregation of duties in processing transactions, one person doesn't start and finish. The initiation starts from the fund manager, then it gets to the custodian, and also there are also layers of authorization levels. So by putting this in place, it prevents some unauthorized or misappropriation of funds. Then also we use automated systems that can flag suspicious or unusual transactions. This also goes a long way to help in preventing misappropriation. And then real-time reconciliation with the CSTs, as I said, and strict access controls, because permissions are not just given to maybe a single individual. You have layers also of strict access controls. So this come together to help in preventing misappropriation of funds, or maybe a singular person wanting to just start a transaction and not doing it in line with the investment purpose of maybe a fund now, for
Right.
example. So all this put together help in preventing this.
Okay, thank you very much, ma'am. So, one thing that just came to mind, is in your experience over the years and just general knowledge in the industry, have there been any instances, where the risk of insolvency actually materialized? And what did the custodian do? Perhaps you don't really need to mention any company name. Perhaps you could just call it our favorite Ewedumbe fund managers got insolvent,
Okay.
and this is what we did.
Okay.
Yes, ma'am.
Okay. So maybe I will just uh, I don't know. I want to see how to answer this question without being so specific. Okay, so maybe like the company we do management company becomes
Yeah.
insolvent now. Yeah. So, or maybe let me not use insolvent. The specific case that happened, that let me not use insolvency, but it's also a case of a kind of complexity as well, but maybe not insolvency. So,
Right.
it's a case of misconduct. Let me put it that way.
Okay.
Misconduct. Yes, misconduct
It's
of
fun.
an asset management firm. Yes. So the firm is managing a large collective investment scheme. That's a CIS, and
Yes.
they were found to be engaged in unauthorized related party transactions. So what
Wow.
happened in this particular case? They were channeling funds from the mutual fund to a private company, right? And that
Okay.
that private company is actually linked to one of the directors of that Ewedu, for example, now of the Ewedu management, yes, firm.
Ewedumbe fund manager.
Yes, Ewedu fund manager. Yes. So the aim was
Yeah.
to channel funds for the fund, that's the CIS, to that's the company of the director of that Ewedu fund management firm. You know, And these
Right.
transactions, they were neither disclosed to the investors nor aligned with the fund investment objectives. In the case of funds,
Yeah.
there are investment objectives. There are things that yes, the custodians help in making sure that the fund manager aligns with the purpose of the fund. So the role of the custodian in this case is to act independently of the fund manager. Do you understand? Who is because the yes, is to act independently. So when this was noticed, of course, the red flags were clear there. You know, the notice of repeated transfer instructions that appeared inconsistent with the trust deed of the fund. you know. So this this
Mm.
these transactions were flagged, and then when they were reviewed internally, it was escalated to the trustee and also the SEC. So what was the action that the
Mm.
custodians took in this particular instance? The custodians refused to process further suspicious transactions that after it was noted that lacked proper documentation and board approvals. So also the custodian initiated a formal report to the Securities and Exchange Commission, you understand, citing that this is possible misconduct, so for further investigation. So what did the SEC do? The SEC suspended the fund manager and launched an investigation. And in the
Wow.
interim, they appointed an interim manager. So, what was the outcome
Mm.
of all this, really? Because the assets were never fully directly under the fund manager's control, investors' funds remain intact and recoverable. Investors did not suffer financial loss from this misconduct of the Ewedu fund management team. And then the custodian's
Yes.
oversight ensured business continuity. It also ensured accurate record keeping and an eventual return to normal operations under a new fund manager. You know. So what are the takeaway lessons from this particular scenario I've painted? One, we'll find out that independent custodianship creates a firewall between the fund manager and the assets. This reduces the risk of fraud or abuse. And then dual authorization as well and documentation checks helps to prevent unauthorized transactions.
Hmm.
So, and also a custodian's ability and the power given to the custodian, let me say, so to speak, to report red flags, directly to regulators, it strengthens the market integrity and also boosts investors' confidence. Thank you.
All right. Thank you very much, Ma, for that in-depth, analysis. So this actually brings me to the next question. Apologies for the tautology in questions. It's just that, like I said, ab initio, a lot of people are not finance
Yes.
experts, on the call. Um, yes. So now we've had a fund manager, so to speak, in quotes, slated not too long ago, and they were not licensed by SEC, and they were not utilizing the custodian. So, what are the major risks when people, a lot from my experience, Nigerians are actually very sentimental investors, and when I say sentiment, they just go for the highest rates, irrespective of the risk. So I think it's very pertinent that they you know ask these questions. Do you have a custodian? At least are you SEC licensed? Things like that. But what are the risks? For investors take putting money in such investments in quotes houses. Thank you, ma'am.
Okay. Okay. So I think first and foremost, it's very important for an investor to make sure that any of the parties that they are dealing with is licensed by the SEC. The SEC is actually the regulator that licenses all capital market operators. So this case is not even only custodian, even fund managers and all the parties in the investment process. I think the first key thing is for the investor to make sure any of these parties are regulated, because like I said in the beginning, the aim, well, fine, you invest, but as much as you want to grow your investment, you also want to feel secure. You also want your assets to be safe. You wouldn't want to lose your money. That's not the aim at all. So the risk of an investor bypassing SEC regulated custodians or fund managers are just one, like loss of capital, like I've mentioned, due to mismanagement, fraud, or embezzlement. If you bypass a SEC regulated custodian or fund manager, they are not answerable to the SEC. And again, let me mention, before SEC licenses licenses any capital market operator, they have already done their due diligence. They've passed through all the rudiments of SEC, and all these capital market operators, they have recourse to the SEC. So by bypassing all these SEC regulated custodians or fund managers, you stand a great risk of losing your capital due to mismanagement, fraud, or to embezzlement. Then, of course, lack of recourse in case, um, for example, an insolvency occurs now on the part of the custodian or the fund manager. There is a lack of recourse because ab initio they were not even registered by SEC in the first instance. And then also the non-compliance with AML laws. This is potentially exposing investors to all the legal consequences that might arise, from those investments. So thank you. That's all I'm.
Thank you very much, ma'am. Thank you very much. I think we have just two more to go, and we can all go back to our day, our very very busy day. It's been a very rainy morning, and we have on the call. This is Folusho Ogundele, the CEO of Zenith Nominees Limited. We've been going through the importance of custodians in an investment transaction, and we've delved into many. We've spoken about the key regulators. We've spoken about transparency, the importance uh, of transparency in the custodian arrangement, oversight. We've also spoken about oversight, uh, um, the oversight function in the investment process. We've spoken about how custodians help ameliorate or settle investors in the case of insolvency and the likes. Now, still speaking about transparency. I know that there are, if we take a PFA transaction, for instance, I know there are about four parties to the fund, if I'm correct, custodians, trustees, fund manager, and regulator. Is that so? And how do they improve transparency and accountability in investment transactions?
Okay, if I hear you well, um, you're asking how custodians can improve transparency and accountability in investment transactions.
Yes.
If
Yes,
I hear you
correct.
correctly, so having a custodian ensures timely and accurate reporting of all their holdings and transactions. Like I mentioned earlier, custodians are bound by the SEC to maintain accurate reporting and holdings of transactions. And then we also have reports as well that are due to be sent to the SEC at different intervals, depending on what kind of reports they are. So by this, it enhances accountability when you do have to we have to report. We have to send reports on a timely and accurate basis, and then also the statement of holdings of each investors. Then also we also have the third party verification of asset values and fund performance. You have the fund manager having their own side of reporting, because fund managers also have statutory reports that they must also send to the regulator. So by having a custodian as well, you can ensure a third party verification of this positions, so to speak. Then standardized reports formats for investors and regulators. We have standardized reporting formats, although when I say standardized, there can still be some that could be tailored to maybe the investors needs, so to speak, because also as custodians, we don't want to encourage some rigidity. So apart from the standardized reporting as well format, we also have those ones required by the investors. Then lastly, reduction of operational risk through automated processes. We have robust automated processes that can reduce human risk, and then reconciliations as well. So all these help to improve transparency, reporting, and accountability in investment transactions. Thank you.
All right, thank you very, 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 very much, man. And the last question, and we will be saying thank you to you, and we kind of all go today. So, how can an investor know for sure that a fund manager is licensed by the SEC and has a custodian? Should they demand to know? How would they know? Is there somebody who go and check, to even know, or is the onus on the fund manager to present evidence to the investor?
Okay,
Thank you
thank
very
you for
much.
that question. So there can be two ways. Actually, there is an independent way of any investor verifying whether any capital market operator is licensed by the SEC, and that's by going to the SEC website. All the capital market operators, be it custodian, be it the fund manager, trustee, or what have you, any capital market operator that is licensed by the SEC, they are independently verifiable on the SEC website. Then also the investor could go a step further, because once you are registered by the SEC, you have your registration certificate. You can also provide that as evidence. So that's just going like a level higher. But like I said, this is independently verifiable on the SEC website. can verify the licensing
Okay, thank
status
you,
of
ma'am.
any capital market operator.
Thank you. Okay, so sorry, ma. There are some questions from the attendees, and if you don't mind, maybe we will just quickly deal two of them. One is the what are the consequences of non-compliance, by fund managers, um, you know, with with in respect of utilizing custodian arrangements and all those kind of things.
Okay. Okay. So the consequences, they will fall short of the regulator. Arm of the regulator will come will come after them. The risk being what's the word now? The risk being sanctioned. Yes, the risk being sanctioned by the regulator or and fined also by the regulator. So non-compliance attracts fines from the regulator, and this is under strict monitoring.
Okay. Also, how have custodial arrangements evolved in response to the industry change? Now that a lot of investments are done online, and there are a lot of tech companies coming online, with the same services. What emerging trends and challenges do you foresee in the future?
Well, I can
That's the
see
last
that
one.
the regulator is doing a lot in this aspect just to bring all forms of investments under the custodial arrangement. There was a point in time where privately managed funds were just um, kept or maybe warehoused with the fund managers, but SEC mandated, that custodians must be appointed for all forms of investment. So I see this SEC, with time doing a lot in this regard. Though it's a gradual thing with all forms of investments that are evolving now. It's a gradual thing, but I believe that eventually, we will get there in the sense that the SEC will reach a point where they'll be able to enforce the custodian role on any kind of investment, be it digital, be it any kind. I believe that with time, SEC will get to that point where they'll be able to enforce all this. Yes. Thank you.
Okay, thank you very much, ma'am. We are really, really appreciative of you coming on the call with us. Once again, on the call with us is Mrs. Folusho Ogundele, the CE of Zenith Nominees Limited, a subsidiary of Zenith Bank PLC. As we young people will say, we give you our flowers today. Provincial flowers. So thank you very much.
Thank
Thank you
you for
very much,
having
ma'am.
me. Thank you for
Thank you
having
very
me. It
much.
was a pleasure. Thank you.
Thank you very much, ma'am. Now, everyone, thank you for joining the call. We really hope you learned a lot today. I even learned a little bit more because there's nothing like speaking with the crucible of knowledge right here on this channel. We'll be having more engagements as regards corporate governance series, and we'll be bringing more experts, in the field around corporate governance and investment framework. So thank you everybody for joining. Have a great day. Thank you, ma'am. Thank you for
Thank
joining and thank
you.
you for honoring
Thank
us.
you.
Thank you.